Good morning. Audio update of the U.S. stock market. I'm Rich Paz for Critical Point. It's Monday, September 9th, 7:37 a.m. Eastern Time. The futures are up 41 points overnight. That can create a gap up. That may create some problems that they'll want to sell it. But as we zoom out and look at from the level 4 swings to the level 3 trends during the month, the model suggesting we'll see more demand than supply, and are likely to see a little improving news, a little bit of relief of concerns over the economy, and is the Fed Reserve going to lower interest rates fast enough? Some of the discussion is that the Fed will only lower a quarter point, but they might give us 3 consecutive drops. So they might be targeting that by early next year, they do knock it down from the 5 to 5.25, 5.5 area down to the 4, 4.25, 4.5 area. And that probably would get them caught up in time. So the bottom line is the model wants to forecast rising prices this week for the U.S. stock market, and then zoom out, and it's saying you can still get a rebound this month ahead of the Fed Reserve meeting, but it's probably limited, that they just don't dare buy all that much. They might still favor selling a little bit just to be safe going into the Fed Reserve, but the selling should be pretty much done. That was a nasty little decline last week for really no reason whatsoever, okay? It really is just a little fear of overreacting relative to what's going on. Nothing has changed long term. So still anticipate the market bouncing this month, but it may be very limited, may not even get back to the record high. We may be struggling here, have to get the Fed Reserve out of the way. And then, unfortunately, late September into October, we can still see additional selling, additional stalling out. Those have been favoring the market really doing nothing all the way to the election or into the end of the year might yet be right. But in theory, by November, we'll actually see the market bouncing, that it's going to like the election. And then another drop, December, Jan, Feb, somewhere's in there. Maybe a couple of drops with some bounce in between, stuff like that. But looking farther out, 2025 should be an up year, a very good up year. All right. So nothing has changed long term. Intermediate term, it hasn't changed for the direction and the time, but it has changed that its limit upside for a while can be a bit sluggish. And then as we go to the very short term, it is suggesting there still ought to be a rebound this week. Okay, we can still get some favorable news, or people just calm down. Now, the bond market this morning is raising interest rates slightly after beating them so much, and that makes sense to me. It was just overdone overreaction, and we may actually see the stock market go up with rising interest rates because everything was just beaten up a little too much. Or I should say those two sectors were beaten up. Gold market is stable. The oil market is stable. And really no shocking news overnight around the world. Nothing's changed economic-wise. The economy is still rolling forward. So I just cannot turn bearish at these levels. Okay, if there's a reason to sell, I prefer to sell a bounce. And it looks like to me on a long-term basis, if they drop it large amounts and fast and hard, it's worth just writing it out if you didn't sell in a timely manner, because it is still a long-term bull market. All right, have a great day. Past results are not necessarily indicative of future results. Thank you.